Please be seated. Your Excellency, Charles Savary, President of the Commonwealth of Dominica, and Mrs. Savary, Honorable Roosevelt Skerrit, Prime Minister of the Commonwealth of Dominica, Honorable Gaston Browne, Prime Minister of Antigua and Barbuda, Honorable Ralph Gonzalez, Prime Minister of St. Vincent and the Grenadines, Honorable Timothy Harris, Prime Minister of St. Kitts and Nevis, Honorable Victor F. Banks, Chief Minister of Anguilla, Honorable Donaldson Romeo, Premier of Montserrat, Senator Honorable Ubaldus Raymond, Minister in the Ministry of Finance and Monetary Council alternate for St. Lucia, Your Excellency Eliud Williams, former President of the Commonwealth of Dominica, and Mrs. Williams, Honorable members of Cabinet, Your Excellencies, members of the Diplomatic Corps, Mr. Timothy Antoine, Governor of the Eastern Caribbean Central Bank, Your Excellency Steve Farrell, Secretary to the Cabinet, Mrs. Rosamond Edmonds, Financial Secretary, other permanent secretaries, Father Charles Martin, delegates, other invited guests, members of the media, Phase 5, who played the music for us early on, ladies and gentlemen. I said good morning already, I'll say it again, good morning again. It is a great joy and a privilege to welcome all of you to this very important function, to mark the change in chairmanship of the Eastern Caribbean Central Bank Monetary Council. It would be remiss of me if I did not take the opportunity to extend a warm welcome to all our visitors to this, our beautiful country. I am sure that you will agree that this is not a fake. It is a fact. It is our hope that your short stay in the nature island of the world will be so appealing to the senses that you will feel impelled to tell others of your experience here in Dominica, and you will return very soon. Welcome, one and all. At this stage, it is with great pleasure that I invite to deliver the opening remarks and to guide us through to the end of this program, the Governor of the Eastern Caribbean Central Bank, Mr. Timothy N.J. Antoine. Let's make him feel welcome as he comes out.
Thank you, Mr. Master of Ceremonies. Excuse me. Your Excellency, Charles Savary, President of the Commonwealth of Dominica, and Mrs. Savary, our outgoing Chairman of the Monetary Council, the Honorable Gaston Browne, Prime Minister of Antigua and Barbuda, our incoming Chairman, Honorable Roosevelt Skerrit, Prime Minister of the Commonwealth of Dominica, members of the Monetary Council, Your Excellency Eliud Williams, former President of the Commonwealth of Dominica, the Speaker, the Honorable Alex Boyd Knight, members of Cabinet, members of Parliament, members of the Diplomatic and Consular Corps, distinguished guests, Father Martin, Deputy Governor Mr. Trevor Brathwaite, directors and staff of the Eccb, ladies and gentlemen, youth here and around our region, members of the media, good morning. Good morning. Good morning. Thank you. We're delighted to be back in beautiful Dominica. It is my distinct pleasure to welcome you to the handing over ceremony to mark the change in chairmanship of the Monetary Council from the Honorable Gaston A. Browne, Prime Minister and Minister of Finance of Antigua and Barbuda, to the Honorable Roosevelt Skerrit, Prime Minister and Minister of Finance for Dominica. Article 7.2 of the ECB agreement states that the Council shall meet not less than twice each year to receive from the Governor the bank's report on monetary and credit conditions, and to provide directives and guidelines on matters of monetary and credit policy to the bank, and for such other purposes as are prescribed under the ECB agreement. Today, the Monetary Council will convene for its 88th meeting and the second meeting for 2017. 2 weeks ago, the ECCU celebrated 41 years of exchange rate stability. That is our currency pegged to the US, 1 to 2.7. 41 years. This is a remarkable feat and a durable testimony to the resilience of our monetary union, and it is something that we should celebrate. Today, I confirm that our EC dollar is strong. As of last Friday, July 14, the backing of our currency was 97.6%. I think most of you know the law requires us to be at 60. Your currency, our currency, is strong. In respect of financial stability, our financial system has strengthened with improvements in capital adequacy and profitability. However, several risks remain, including the threat of loss of corresponding banking relations and the declining but still too high level of non-performing loans, now averaging 11% in the ECCU. A proactive approach to consolidation and amalgamation of national banks is necessary and would help to achieve our goal of a strong, diversified, and resilient financial system. In respect of fiscal and debt sustainability, significant challenges persist. I think we all know that. However, our currency has recorded a decline in our debt-to-GDP ratio from 75% at the end of 2015 to 72.5% at the end of 2016. Later today, the Council will discuss interim fiscal targets as we plot our course to maintain or attain the target of 60% by 2030. We continue to encourage our governments to enact fiscal responsibility legislation that will embed resilience and flexibility in our fiscal framework. Ultimately, such a framework will lower growth volatility. That's important. Distinguished guests, the Monetary Council convenes at a time when the global economy is exhibiting some signs of recovery, and there is indeed a modest pickup in growth. However, this recovery is accompanied by considerable uncertainty, including U.S. policy on issues such as healthcare reform, tax cuts, and infrastructure spending, and the outcome of Brexit negotiations, which are now underway. We in the ECCU are a very interested party in these policy outcomes, not simply from a global economic perspective, but precisely because the US and the UK are our major trading partners and host our region's largest diasporic communities. Almost a decade later, the global economy is yet to deliver the levels of growth recorded prior to the global financial crisis. Indeed, over the past 5 years, growth in the global economy has averaged a mere 3%, promoting strong global concern about the notion of lower growth ceilings, caused in part by a global productivity slowdown. For example, the growth ceiling in the United States in the 1990s was around 4 to 4.5%. Today, that ceiling appears to have fallen to about 2.5 to 3%. Indeed, the US has not achieved an annual rate of economic growth of more than 3% in each of the past 11 years, the longest such stretch of sluggish growth in US history. Here in the ECCU, after a difficult decade, during which growth averaged about 0.8%, things are looking up somewhat. Last year, the ECCU recorded a growth of 2.6%. This year and also next year, we project growth of 3%. When juxtaposed with its major trading partners, the ECCU can be said to be holding its own on a pitch offering variable turn and bounce, and with the ball keeping relatively low. I invite us to cogitate on two questions. What will it take for us to attain and sustain a growth rate of 5% per annum in the ECCU? What will it take? And secondly, what will it take to generate 60,000 jobs over the next 8 years? And in case you're wondering where that number 60,000 comes from, it is our initial estimate of what is required to secure single-digit unemployment in the ECCU. Against the backdrop of what many economists call a global productivity slowdown, we in the ECCU must fully apply ourselves to a productivity speed up to help raise our growth ceiling or growth trajectory. In my humble estimation, this shift requires our full commitment to socio-economic transformation and will entail critical reforms and investments. For this reason, the focus of the strategic plan of the Eastern Caribbean Central Bank will be socio-economic transformation, and this plan will be launched on September 7th, God willing. Critical and structural reforms include overhaul of our education curriculum and improving the ease of doing business for all investors, including our local entrepreneurs, many of which are among our youth. I have a passion for young people, as you probably know. Critical investments include scaling up of technical and vocational skills training, including certification in coding to prepare for the ICT jobs that are available, or opportunities that are available in the 21st century. It also includes job training, research and development, and infrastructure, such as high-speed internet and renewable energy. And as I drove around the country on Wednesday, I was very pleased to see more and more of our street lights here in Dominica using solar PV. I think that's commendable, and that's the direction we want to go. In the financial sphere, it involves building out our financial markets infrastructure, including our partial credit guarantee scheme and the credit bureau. It also requires, reducing our dependence on the use of cash by using more electronic and digital payments. Now, data are hard to come by in this region. It's one of our challenges. But our initial estimates suggest that, on average, 70% of all our transactions or purchases are either cash or checks. That's a high number. So, we need to set a target. And I'm suggesting that we try to halve that number in 5 years. That's ambitious, but if we resolve to do it, it can be done. Now, cash is not going to go away, and that's not what we're attempting to do. But we do believe it can make a big difference to our economic trajectory. Remember, that's the question, how we get to 5% and sustain that. In addition to the prospect this shift offers for helping the productivity speed up, I believe this shift is part of the solution to addressing rising bank fees and charges, a concern repeatedly expressed by our citizens, customers in the ECCU. Furthermore, the use of electronic and digital payments could be a useful tool in responding to the issue of rising criminality, a grave concern in our fair eyes. The fact that most of our citizens already possess at least one smartphone means this shift is feasible, but internet connectivity and speed must improve. In conclusion, this is only opening remarks, I reaffirm the commitment of the entire management and staff of the ECCB to deliver exceptional service for the good of the people of the ECCU. I want you to know it is a privilege, it's an honor, it's a calling to serve you, and we take it very seriously. And I want to salute the men and women at the Central Bank who are here with us this morning. Give them a round of applause, please. Strengthened by the grace of Almighty God, guided by the collective wisdom and collective action of the Monetary Council, undergirded by our core values, which are service excellence, teamwork and truth-telling, accountability and results, our star mantra, supported by our development partners, and motivated and held accountable by a fully engaged citizenry, we are confident of success. I thank you. And now, ladies and gentlemen, I wish to record our profound appreciation of our outgoing chairman, the Honorable Gaston Browne, Prime Minister of Antigua and Barbuda, for his sterling contribution over the past year. He has been very committed and supported, and I think his prompt passage of council-approved legislation is one very testament to the commitment that he has espoused. On that note, I'm delighted to ask Prime Minister Browne to address us.
Thank you very much, distinguished Governor. Your Excellency, Charles Savarin, President of the Commonwealth of Dominica, and Mrs. Savarin, colleague heads, members of Cabinet, members of Parliament, members of the Diplomatic Corps, distinguished ladies and gentlemen. On behalf of the Monetary Council, I am pleased to welcome everyone to the handover ceremony of the chairmanship of the Eccb Monetary Council. Today, I will hand over the chairmanship to the Honorable Roosevelt Skerrit, Council member for the Commonwealth of Dominica. When I assumed chairmanship of the Monetary Council, the global economy was recovering, but there were uncertainties as to the result of Brexit and the US presidential elections. At that time, the global economy was projected to grow by 3.6% in 2016. However, actual growth was 3.1%. The Eastern Caribbean Currency Union, ECCU, continues to recover and is estimated to have achieved a moderate growth of 2.57% in 2016. On assumption of office, our new governor articulated a new vision for the bank. A new vision anchored on 5 strategic priorities, namely exchange rate stability, financial stability, fiscal and debt sustainability, growth, competitiveness, and employment and organizational effectiveness. This vision has been endorsed by the Monetary Council. I will now touch briefly on some of our accomplishments in these areas during my tenure. And you would recognize that some of these accomplishments were articulated by the governor. They are being repeated for emphasis. I now look to the issue of exchange rate stability. Our exchange rate remains strong and stable. During the past year, our back-end ratio averaged 97%. Earlier this month, on July 6th, our currency union celebrated 41 years of exchange rate stability on the peg of 2.7 to 1, which was set back in 1976. This is a tremendous achievement for which we ought to be justifiably proud. On the issue of financial stability, during the year, overall financial sector indicators continued to improve. I wish to highlight that the non-performing loans ratio, a key indicator of asset quality, declined from 17% in 2015 to 11.1% in 2016. Capital adequacy ratio moved from 14.8% to 18.2% over the same period. During my tenure, the bank made significant strides in the operationalization of the new Banking Act. Accordingly, it has stepped up its supervision, including the frequency and timeliness of on-site examinations and submission of these reports to our banks. A major challenge to the banking system is de-risking or loss of corresponding banking relations. For its part, the bank continued its advocacy on this issue at meetings of the OECS Authority, CARICOM heads of government, and central bank governors, as well as with international financial institutions such as the World Bank and International Monetary Fund, and with the US government. I am pleased to note, as per my CARICOM mandate, Antigua and Barbuda hosted a successful conference on de-risking in October of 2016, and we continue to advocate on the issue of de-risking in the various regional and international fora. A rationale provided for de-risking is the small size of transactions with some banks and the high overhead cost of due diligence by the corresponding banks. The Monetary Council actively considered this issue and recommends that our national banks amalgamate to achieve the economies of scale and greater efficiency. This matter, on which we intend to engage our citizens, is being dealt with as a matter of priority. Additionally, in direct response to the issue of de-risking, the Monetary Council took the decision at its 85th meeting held on the 22nd of July 2016 to recommend to member governments that the legal responsibility for anti-money laundering, counter-financing of terrorism, AML-CFT, supervision and regulation of financial institutions licensed under the Banking Act be transferred to the Eastern Caribbean Central Bank. We are thankful for the support of member governments as we move to amend the legislation. In April of this year, the Banking Act was examined to address areas that could further improve the regulation and supervision of the banking sector. The review was led by a ministerial subcommittee comprised of the Honorable Dr. Ralph E. Gonsalves, as well as Council Member for St. Kitts and Nevis, the Honorable Dr. Timothy Harris, and myself. We engaged our bankers and held discussions on the proposed amendments to the Banking Act. The final recommendations will be discussed at today's meeting of the Council. Despite the declining trend, non-performing loans in the region remained above the prudential level of 5%. In this regard, the operationalization of the Eastern Caribbean Asset Management Corporation, ECAMC, is critical to help reduce the elevated level of non-performing loans in the currency union. I am particularly pleased to report that staff of the ECAMC has been recruited, and the ECAMC is now operating from its base in Antigua. When I accepted the chairmanship of the Monetary Council, the issue of bank fees and charges was being debated. The committee established by the Monetary Council to review commercial banks' fees and charges has delivered its report. This report, along with the report from the Bankers Association, is being examined by the Central Bank and will form the basis for further discussions at the level of the Monetary Council. In the context of the low-growth environment, the Monetary Council is cognizant of the declining credit to the private sector by the commercial banks. Several initiatives to improve access to finance by the private sector are being implemented. At its meeting in March 2017, the Monetary Council approved a credit reporting bill and regulations, enabling legislation to establish a credit bureau. This legislation has now been submitted for passage through the parliaments of the respective member territories and was duly passed in Antigua and Barbuda. The establishment of the Credit Bureau is expected to reduce information asymmetry in the credit market, increase the efficiency of credit application processing, improve credit underwriting, and contribute to economic growth by improving access to credit, particularly for micro, small, and medium-sized enterprises, MSMEs. Let me now turn to the issue of fiscal and debt sustainability. Over the year, the Monetary Council noted an improvement in the ECCU debt to GDP ratio from 79.3% in 2014 down to 72.5% in 2016. This augurs well to achieve a debt to GDP target of 60% by 2030. At today's Council meeting, we will discuss member states' interim fiscal targets and will enable member countries to achieve the 60% target by 2030. The Bank continued to engage in dialogue with member countries on developing and enacting fiscal responsibility legislation. In addition, the Bank has been an advocate for the transparency in the flow of funds under the Citizenship by Investment Program, CBI program, and the use of CBI proceeds for maximum development impact. In respect of debt management, the Bank provided technical support to build capacity under the Canada Eastern Caribbean Debt Management Advisory Service, DMAS program. Ladies and gentlemen, I am pleased to report that from September 2016 to March 2017, the Bank hosted a Junior Debt Managers Program aimed at strengthening public debt management in the ECCU countries by training young professionals with the skills and knowledge required for modern and effective public debt management. I now turn to growth, competitiveness, and employment. Ladies and gentlemen, while the ECCU economy continues to recover, more work is required to achieve the targeted 5% rate of growth per annum. On March 1st, 2017, the Bank convened the inaugural Growth Dialogue with social partners at the Eastern Caribbean Central Bank headquarters in St. Kitts, aimed at identifying the key challenges and opportunities for growth, which can be prioritized into key deliverables of an ECCU growth action plan. It is expected that the ECCB and the OECS Commission would collaborate with the member countries on the implementation of the growth action plan. In this regard, the Monetary Council welcomes the enhanced collaboration between the ECCB and the OECS Commission as signaled through the signing of a Memorandum of Understanding, MOU, by both institutions on November 22, 2016. Given the nexus between finance and growth, it is necessary to improve access to finance by the private sector. Consequently, the Monetary Council approved the agreement for the establishment of the Eastern Caribbean Partial Credit Guarantee Corporation, which is designed to encourage financial institutions in the Eastern Caribbean Currency Union, ECCU, to increase their lending to micro, small, and medium-sized enterprises. The legislation is currently going through the parliaments in member countries and again was passed in Antigua and Barbuda. Let me now turn to the issue of BICO-CLICO. With respect to insurance matters, Council remains fully engaged so as to secure the most favorable outcome possible for policyholders affected by the BICO-CLICO fallout. We have seen significant progress with respect to our pursuits of a resolution of BICO. In this regard, many policyholders have benefited from significant recoveries, and it is our expectation that with the passage of the Plan of Arrangement BICO-CLICO Act in the Bahamas, the way is now clear for a further and imminent dispersal of funds to eligible former BICO policyholders. Progress in respect of CLICO has been disappointingly slow. We continue, however, to press for the enforcement of the rights of the ECCU policyholders and shall continue to be persistent and aggressive in the pursuit of a just and equitable outcome for our people. On the issue of organizational effectiveness, I'm advised that the bank recorded a profit of $6.3 million for the financial year ended March 31st, 2017. I wish to commend the bank on its return to profitability after 3 years of losses. In conclusion, having accounted for my stewardship, I wish to place on record my profound appreciation for the support received from my colleague council members, the Eastern Caribbean Board of Directors, the Governor, management and staff of the Eastern Caribbean Central Bank during my tenure. I wish to express my special gratitude to the Governor and the entire staff of the Eastern Caribbean Central Bank for hosting my visit to the Eastern Caribbean Central Bank in April. Governor, I thoroughly enjoyed the lively interaction with your passionate staff and reaffirm my support for the work of the Central Bank. And I hope that this particular initiative will be institutionalized. Ladies and gentlemen, it is my distinct pleasure to hand over the chairmanship of the Eastern Caribbean Central Bank Monetary Council to my esteemed colleague and friend, the Honorable Roosevelt Skerrit, Council Member for the Commonwealth of Dominica. I remain committed to working with your incoming chairman and other members of the Monetary Council as we press forward in the service of the people of the region. I thank you.
I can assure my colleagues that on the agenda certainly will not be cricket, West Indies cricket. And to say to the Master of Ceremony, Mr. Hyacinth, who might be a student of contemporary Caribbean history, what he may not know is that the Constitution of St. Vincent and Grenadines specifically mentions 3 executive offices: that of Prime Minister, that of Minister of Finance, and Attorney General. Prime Minister Gonzalez is the Prime Minister, he's the Minister of Finance, and he's also a lawyer. So you could have seen the number of portfolios which he commands in the government of St. Vincent, because there is but one government, and that is Dr. Gonzalez. Let me, first of all, recognize the presence of our President, His Excellency Charles Savre and Mr. Savre, our Speaker of the House of Assembly, Honorable Alex Boyd Knight, my colleague heads of, council members, my colleague council members, and especially the outgoing chairman, Honorable Gaston Browne, Prime Minister, Minister of Finance of Antigua and Barbuda, our former president, His Excellency Elliot Williams and Mrs. Williams, my cabinet colleagues here in Dominica, our distinguished governor, Governor Antoine, and I really want to publicly commend his stewardship and the leadership which he provides to the bank. And as a young man, a Caribbean person, we'll be very, very delighted to that level of seriousness. The staff of the Central Bank, my own Financial Secretary, Mrs. Edwards, members of the Diplomatic and Consular Corps, over there, Father who prayed for us this morning, invited guests, ladies and gentlemen, good morning. On behalf of the government and people of Dominica, I am delighted to welcome all of you, and especially my colleague members of the Monetary Council, to Dominica, the Nature Isle. I am aware that this meeting takes place over one day, and the limited time does not allow you to take full advantage of the country's unique attributes, such as our hot sulfur baths that will rejuvenate your body and soul. I still invite you to do so, if at all possible. And of course, it can be open at 3 o'clock in the morning or 12, so whatever time. Today, for the second time, I assume with humility the chairmanship of the Monetary Council. Let me begin by thanking the outgoing chairman, Honorable Gaston Browne, for his sterling service over the past year. I intend to build on this very good work during my chairmanship. Ladies and gentlemen, the Eccb has advised that the outlook for the ECCU economy is generally positive. The global economy continues to demonstrate a modest recovery. Accordingly, global growth for 2017 and 2018 is projected at 3.5% and 3.6%, respectively. In parallel, growth for our currency union is projected at 3.2% in 2017 and 3.1% in 2018. Tourism and foreign direct investment, particularly through citizenship by investment programs, are and will continue to be the main drivers of this performance. In the case of Dominica, we are keenly aware of the importance of the citizenship by investment program in financing critical infrastructure in the aftermath of Tropical Storm Erika. Moreover, the CBI is critical for transformational projects such as geothermal development and the construction of our international airport. While a positive growth outlook is welcomed, the current outlook is well below our 5% annual growth target required to address key macroeconomic objectives such as full and meaningful employment and a more equitable distribution of the benefits of growth. We see a future of strong banks, vibrant economies led by tourism, agriculture, medical education, financial services, and powered by technology. We see a future where our citizens can find or create decent and meaningful work. We see a future where our children can grow up to realize their God-given potential. We see a future of peace, stability, unity, and prosperity. Ladies and gentlemen, securing the future we want for our region demands our commitment to nothing less than economic transformation. For this reason, the Eastern Caribbean Central Bank has set economic transformation as the focus for its strategic plan for the period 2017 to 2021. In September, the bank will formally launch its strategic plan. I commend the governor for his foresight to commission the preparation of this plan and the senior management and other staff for ensuring that the plan was completed. I look forward to very strong results. The process of economic transformation is not a sprint. It requires, inter alia, a solid foundation, an appropriate infrastructure, a strategy, resolute implementation, and patience. Above all, it requires bold, courageous, creative, and caring leadership. In this regard, the Monetary Council is fully committed to playing its part. It is with this high level of commitment and with the eagerness to make life better for citizens of the Eastern Caribbean Currency Union that I assume the chairmanship of this council. From the vantage of the Monetary Council, there are three key economic challenges at this time. One, strengthening the stability of the financial sector. Two, addressing the deficiencies in the flow of credit to key economic drivers. And three, enhancing long-term growth potential and competitiveness. Over the next year, the focus will be on addressing these challenges. Arguably, the most significant challenge to banking in the ECCU at this time is the practice of de-risking by correspondent banks. The central bank, in collaboration with key partners, will continue its strong advocacy to preserve correspondent banking relationships in the ECCU. These relationships facilitate essential banking services, such as wire transfers and cross-border credit and debit card payments. Without these services, our trade would be disrupted, our economies would be crippled, and our development would grind to a screeching halt. De-risking is a major concern for every country and for every bank in every country. However, in our region, it is the indigenous banks that are at greatest risk. I issue a call to all the citizens of the ECCU to adhere strictly to the guidelines provided by the banks, and to ask also that we do not use social and other media to disseminate stories that could affect how our regional banks are viewed by the international community. We have to work together to ensure we put an end or halt the process of de-risking in our region. This cannot and should never be seen as a political issue. In order to strengthen financial stability, the Monetary Council over the next year will pursue an ambitious agenda of reforms. I now highlight some of these reforms. The full operationalization of the Eastern Caribbean Asset Management Corporation, Eccb. The issue of high non-performing loans in our banking system was a critical one. The Eccb is the entity established to lead the efforts of the region in that regard. The Eccb will serve the dual purposes of, one, managing the receiverships of the resolved banks in Antigua and Barbuda and Anguilla, and two, acquiring distressed loans from other ECCU banks. The Eccb legislation has been passed in all the ECCU member states. Critical staff has been engaged, and a strategic plan for the corporation is being prepared to ensure that the objectives of the corporation are met. Amendments to the new Banking Act. The new Banking Act is in place in all ECCU states. There are areas of concern identified by both the ECCU Bankers Association and the Central Bank. Addressing these will require amendments to certain sections of the Act. Undoubtedly, these amendments will further improve the regulation and supervision of the banking sector. Amendments to the Anti-Money Laundering and Counter-Financing of Terrorism legislation, AML-CFT legislation, to improve the AML-CFT supervisory regime in the currency union. The key provision will be conferring the powers of supervision for AML-CFT to the Eccb for all entities licensed under the Banking Act. This move will strengthen the region's negotiation to preserve correspondent banking relationships and to find solutions to the serious threat of de-risking or loss of correspondent banking relationships. Completion of preparatory work for the establishment of the Credit Bureau to provide credit granting institutions with a better means of assessing credit risk. The Credit Bureau will address the issue of asymmetric information and accelerate the speed with which credit applications are processed. It is the expectation that the Credit Bureau will contribute not only to better credit quality, but also financial stability. Preparatory work for the establishment of the Eastern Caribbean Appraisal Institute, ECI. The ECI is being designed to improve the region's capacity to properly appraise assets that are used to provide collateral for loans. At present, there are no regional standards on which financial institutions, such as banks and credit unions, can rely for the valuation of real estate, including residential and commercial mortgages. Indeed, the recent challenges in the banking system revealed that some of the collateral backing non-performing loans were overvalued. This finding meant less than adequate provision levels by the banks and created an urgent need for these banks to augment the capital. Significant efforts are now being made to improve the region's real estate appraising capacity, such as minimum appraisal criteria set by the Eastern Caribbean Central Bank and the formation of a committee of appraisers drawn from each member country to develop appraisal guidelines for banks. Preparatory work for the establishment of the Eastern Caribbean Financial Services Commission. The ECFSC is proposed for improved monitoring of regulated institutions such as insurance companies, pension funds, and other non-bank financial institutions for systemic and individual risk that could impact either the wider financial system or individual institutions. It should be noted that this commission will not cover international financial services or offshore services. In addition to these reforms, the Monetary Council will encourage, consistent with the 8-point stabilization program approved in 2009, the amalgamation and consolidation of national or indigenous banks. Operating within undiversified economies and small markets, particularly in the post-global financial crisis era, has contributed to the challenges confronting our indigenous banks. These challenges include issues of capital adequacy, operational efficiency, profitability, and returns on investment, risk management, corporate governance, and correspondent relationships. Within the financial system, a process of consolidation is underway as financial institutions respond to the rapidly changing operating environment. The indigenous banks in ECCU will benefit from a proactive response to these global realities. The consolidation of the indigenous banks is expected to result in stronger, more stable indigenous institutions, which will be better able to treat several issues that currently confront small, standalone indigenous banks, such as 1, loss of correspondent banking relationships, 2, containment of compliance costs, 3, raising and maintaining capital, 4, rollout of new technology-driven services to satisfy changing and rising customer expectations. The trend towards consolidation is already evident in other sectors of the financial system, particularly the credit union sector. The success of credit union amalgamation in Dominica and St. Vincent and the Grenadines are well known. I will say to you, as the Prime Minister of Dominica, I fully support the amalgamation of indigenous banks in the ECCU. It is in our benefit, and we have to pursue it with speed and a determination to conclude on those arrangements. Given the criticality of financial stability and the importance of national banks, the Monetary Council has mandated the Eccb to commence a regional conversation on this issue of bank consolidation and amalgamation. We cannot speak about sovereignty, and we have had the bank for many years, because if we continue as our own little banks in our different islands, we run the risk of being washed away on the Atlantic Ocean. To facilitate this conversation and expedite the process, the ECCB will engage all indigenous banks as well as publish a consultative paper later this year. It is recognized that the structure of the indigenous banks vary from country to country. I therefore urge board of directors, shareholders, as well as bank management to recognize the importance of this matter and to treat with it as an objective manner as possible. Ladies and gentlemen, time is of the essence on this matter, and I say no more. The stability of our region to generate foreign exchange earnings through competitive export sectors is critical, not just for monetary and exchange rate stability, but ultimately for economic transformation. This means that we must urgently address the growth and competitiveness issues in our currency union. In that regard, to that end, the Monetary Council will support the implementation of the action plan emanating from the Growth Dialogue, which was held in March of this year. Some of the recommendations include identifying the contributions of each country to the ECCU growth and jobs target, building our human resource capacity by revamping the education and human resource development system, broadening regional money and capital markets, including more saving and investment options, and developing regional and national infrastructure for reliable and sustainable air, land, and sea transportation. Evidently, the Eccb will need to work very closely with the OECS Commission and member countries to implement this action plan. Going forward, the bank will support programs for improving access to finance by micro, small, and medium enterprises via instruments such as the Eastern Caribbean Partial Credit Guarantee Corporation. My only concern with this is that I believe the World Bank should give a little more money to us to have this partial credit system. But as little as it is or small as it is, we can start with it. I am convinced that if our economies are to grow at faster rates, productivity of workers must be improved. I trust that through the engagement of the social partners, that we can develop mutually acceptable plans to increase output. In conclusion, ladies and gentlemen, securing the future we want demands nothing less than economic transformation. To that end, transformative reforms are essential, a few of which I have highlighted today. I record my appreciation of the Monetary Council, Board of Directors, Governor, management and staff of the Central Bank for their commitment to the regional cause and their hard work. I look forward to the coming year with hope and optimism. As a regionalist, I fully understand the power of solidarity and collective action. Accordingly, I invite us to join hands as together we confront and conquer the challenges before us. I want again to thank, on behalf of Council members, the distinguished leadership provided by our esteemed Prime Minister of Antigua and Barbuda, and to say to him that when the going gets tough during my tenure, I will certainly visit Antigua and Barbuda. Distinguished ladies and gentlemen, colleagues, friends, I thank you for your courtesy of listening to me. Thank you.
Thank you very much to our new chairman of the Monetary Council, the Honorable Roosevelt Skerrit, Prime Minister and Minister of Finance of the Commonwealth of Dominica. In closing, I have 3 announcements. First, thank you for coming. We really appreciate your presence. Second, we will need more than your presence in the next year. We will need your partnership, and we will need your prayers. Can we count on you for that? Thank you. And thirdly, refreshments will be served outside. And on that note, ladies and gentlemen, distinguished guests, ladies and gentlemen, thank you very much. God bless you all.